Can Kodiak AI's driver-as-a-service model, with about $2.7 million in revenue over the first 9 months of 2025 and one 100-truck Atlas Energy Solutions deal, realistically support a roughly $1.32 billion public valuation? Or is its future hinging on the bet that operations will scale from 10 driverless trucks in the Permian Basin to projections of hundreds or thousands of commercial and defense autonomous trucks by 2027? Kodiak AI is a U.S.-based autonomous trucking company focused on developing and commercializing a self-driving system for long-haul trucks. The core business model provides an autonomous driving system as a driver-as-a-service subscription, where fleets own or lease trucks and pay recurring fees per mile or per truck, while Kodiak supplies autonomous hardware, software, and remote operations support. Kodiak has run paid freight hauling pilots with its own test fleet for shippers, including J.B. Hunt, Werner Enterprises, IKEA, and Maersk, and it now trades on NASDAQ under ticker KDK after completing a SPAC business combination. Here's the problem. Kodiak reported approximately $0.77 million in revenue for Q3 2025 and about $2.7 million for the first 9 months of 2025. Trailing 12-month revenue around late 2025 is described in secondary sources as approximately $14.9 to $16.4 million. Kodiak reported a Q3 2025 net loss of approximately $269.9 million, largely from de-SPAC accounting charges, and an operating loss of about $29.9 million for the quarter. For the first 9 months of 2025, operating cash outflow was about $70 million, and free cash flow was approximately negative $82 million. As of the end of Q3 2025, Kodiak reported cash and cash equivalents of about $146.2 million. Analyst and market data sources place Kodiak's market capitalization in late 2025 at approximately $1.3 billion against these revenue and loss levels. Here's their position. Secondary analyses of Kodiak investor materials cite an indicative autonomous driving service price of approximately 97 cents per mile. Those same sources cite an implied per-truck driver-as-a-service license value of roughly $341,000, with the period not clearly stated and not confirmed in SEC filings. Kodiak describes a long-term goal of deploying thousands of autonomous trucks via driver-as-a-service, targeting roughly 60 to 80% gross margins on the software and services stack, rather than owning trucks itself. Today, Kodiak states that revenue is a mix of technology licensing, freight hauling services, U.S. government and defense contracts, and engineering services with OEM and defense partners, without a public segment breakdown. On the commercial side, Kodiak operates a pilot with Atlas Energy Solutions in the Permian Basin, including an initial commitment for 100 driverless trucks dedicated to hauling sand on private lease roads. As of Q3 2025, Kodiak and Atlas report 10 fully driverless trucks operating 24/7 on Atlas's private roads, demonstrating driver-as-a-service operations without safety drivers on that route. On the defense side, Kodiak was awarded a $49.9 million U.S. Department of Defense contract to develop and deploy autonomous vehicles for Army applications, alongside industry coverage describing roughly $30 million in additional Army autonomous vehicle program value involving Kodiak. Looking ahead, secondary summaries of Kodiak investor materials cite management projections of 200 to 400 autonomous trucks deployed by 2026, corresponding to roughly $60 to $120 million of annual revenue. For 2027, the same sources cite management projections of around 2,000 autonomous trucks deployed, implying approximately $600 million in annual revenue under the driver-as-a-service model. Analysts often cite an estimated annual contract value of about $15 million for the initial Atlas Energy Solutions agreement, though this specific figure is not clearly disclosed in SEC filings. Economically, based on about $70 million of operating cash outflow over the first 9 months of 2025 and $146.2 million of cash at Q3 2025, analysts estimate an effective cash runway of around 1 year at a similar burn rate. While public materials and industry coverage characterize valuation as primarily tied to anticipated future deployments of hundreds to thousands of autonomous trucks, rather than current low single-digit millions of annual revenue.